CTM. What's going on, everyone? Happy July 5th. Glad to be here with you all. I hope you are all well and doing great. Good morning, good afternoon, good evening, wherever you are right now in the world. I am so glad that you were here. Pat, I guess you might be from down under in Australia. Justin, vacation in Italy. I hope you have the most incredible time. I'm so glad that you were able to get there. So many people talking about just not being able to get out on flights. That is beautiful, my friend. You deserve it. Shaping the youth, the future. Really, really glad for that. It is Taco Tuesday today. We got a pretty exciting, strong session ahead. I'm really looking forward. It's going to be important. It's going to be really important. Yesterday's July 4th session, I don't know. If you missed it, it's hard because we're always moving forward. We're always covering a lot. You'll see even in today's session, perhaps something even groundbreaking about to be introduced. And that's going to be always the way. CTM. Yesterday's session, July 4th special. I think there was something pretty interesting talking about CTM 1.0. I would make sure to catch that session, that portion of the session. And I would also catch the portion of the session where we talked about the pi cycle. And then I would go into the Discord and read Wes's comment about the pi cycle as well. And, and here we are, those that are able, putting in the work, making sure that we continue to learn, grow, making sure that the market is what is giving us the lessons. I have a chart of wheat up here, right? That's kind of funny. I mean, what's going on with wheat? Everyone's aware of the situation, right? The wheat shortages. We're looking at both Russia and Ukraine being bread baskets of the world. We are not able to forget even the amount of wheat able to get out of the Ukraine. Now, I know over the past week, Russia has made some arrangements, giving up a pathway out of good faith in order to get that wheat out. I think that the problem is, but the markets are forward-looking, aren't they? I think that the problem is that we're concerned about the planting and lack of planting that's being taken place for the crop coming next year. And yet the market is pricing in, what is the market pricing in? What's going on not just with wheat? You take a look at oil coming significantly off. By the way, how amazing, right, that you are seeing that confluence we looked at in yesterday's session. We looked at three different, I know this chart is not really the neatest, but we were looking at, first of all, the breakdown and then the retest right there. We were looking at this line over here from Bronco, right, over there, that's 2. And then we had that horizontal resistance, the trifecta right over there. And price, sure enough, was rejected by it. And oil's coming off quite hard. Right? The markets are, let's say, I don't know what's going on. It feels like to me, and I don't know that this is correct or not, but it feels like to me that some pretty severe price manipulation is going on. I wonder why that would happen. Whose benefit would it be, whether or not if it was artificial for commodity prices to be coming off at this particular moment? Anyway, I don't know, but I want to talk about what I feel, what I see, what I feel, what I'm seeing and what's going on. And then I wanted to go back to 2008, the Great Recession, and looked what happened. And by the time that prices came off back to where they are today, like we saw pre-invasion, prices on wheat today have come back to where they were pre-invasion. And I'm looking over here when wheat finally came back to where they were, right, before the Great Recession. This is October 2008. That was right around where we bottomed out. So, right, that was when we had the bank bailout, December 2008. So, I don't know, just taking a look around, trying to make sense of what the market is showing us and why, and seeing if we could find any clues. But this seems weird to me. I'm just pointing that out. Same thing. We are seeing oil coming off. We know that we've been watching the 10-year come off. Third attempt, finally coming down towards that first target over here. And then we're seeing the dollar milkshake theory playing out, right, Mr. Bitholder? I don't know that this is the dollar milkshake theory, to be honest. This is for sure euro. Euro is weighted 57%, or at least it was like 6 months ago, of the dollar index. And you are seeing right over here as the EU is just on the verge, right? They're continuing to ease, and it's being priced in over here. We're getting close to parity to a dollar on the exchange rate. A long time, many people have talked about, right? 80 cents coming back to there. Look at this momentum over here right now. I'm just trying to see where there's any bit of meaningful support, right? Well, right around the whole number, and then much lower around that 96 cents. So, but also interesting, with that dollar really strong today, or the DXY strong because of the weighting on the euro. You're not seeing that take place here against the yen. My belief is because the falling yields, the falling 10-year is taking pressure off the Bank of Japan. Therefore, they're having to print less yen at this particular moment to defend the yield curve. And this is also notable and worthy to watch what happens going forward. There were some people, actually it was Brent Johnson, Santiago Capital, Mr. Milkshake himself, who said a couple of weeks ago, I don't know if it was 2 weeks ago, I don't know if it was 3 weeks ago, and he did say, in his opinion, that he felt like let's call it the attack. It's such bad terminology, but let's just talk about the situation in Japan. He felt like that was going to alleviate, and he was talking about the situation worsening in Europe. So I have to say, follow those with a history of getting it right and lean into someone when they are strong. That's Brent right now then. And look, we've talked about, or I gave a hard time, right? Personally, I give him a hard time. Like over here, not like keeping that dollar milkshake theory intact. And that's a long time to be on the wrong side. No question about it. You could just say, well, 2 years later, I'm back right. Yeah, if that's your type of outlook. We've done the same thing also with some views from our friend Raul. Where is he a friend? Did you see that his new venture, like basically tokenizing everything? Do you think people now realize what that does to Bitcoin? Hey, it's a free market. Everyone could do what they want, but nevertheless, I'm not going to get into that. But I wanted to get into the 10-year, right? Because that's a long time to be on the wrong side of that trade as well. And anyway, not that we for sure weren't. We know what we're talking about. Anyway, that's how we're starting off today's session. This is going to be a good one. We got a lot to talk about. I want to get into it. First, just taking a look at what's going on. It is brutal out there. There's no question about it. Equity markets now, after being NASDAQ being down over 1% today, is now reversing, turning green, and it's just got into this lot of resistance here and then resistance above. So, that's tough out there. I'm going to really say it. It is really, really, really tough about it. Sell impulse still underway, and that's that. Looking weak. That was beautiful, by the way. That was just beautiful that you had the sell impulse into the resistance and then a resumption down. Not able to resume down past that last swing low. Just observations, nothing more, nothing less. And then I want to get into it now. So we're going to move over and talk about what's going on over here. This is going to be very important. So please pay attention. Just perk up for 1 minute. I'm going to run through it quickly. It's very important. You'll notice in the description today, I've gone ahead and added all of my preferred templates. I think it's very important. I will make sure, at least, I'm trying to plant in seeds in my brain right now, that once a week, at least go over the settings that I'm using just to confirm with everyone. But we are back towards a familiar place right now where price is going sideways. Now, on the long side, what I'm talking right now, I think is very essential. It's very important. Please pay attention. It's going to help make you stronger, and it's going to help you see things a lot clearer. And I'm going to be talking about things right? This is a buy side only of Bitcoin. But in this moment, I'm talking about everything in relation together. So I'm talking about the buy side and the sell side together. And I'm talking about both Bitcoin and Ethereum. So in that lens, view everything that I'm saying right now. I'm talking about all four together. Well, Bitcoin and Ethereum, buy and sell side together. The buy side here has prices gone sideways, is doing a very good job about keeping us out of the market on Bitcoin. Okay. Now on this, by the way, I have them in below, and I don't think because of what I want to cover right now, this is the best time to do it. Nevertheless, let me go ahead. My preferred settings for the buy side only are using the Kalman filter with the custom settings. It's a 2400 Kalman, a beginning approach of 0.7 and a final approach of 1.2 with a 2.5% stop loss. Now, these are my preferred settings. I don't know that they are the best settings. There's no question that some people are pointing out they're using, I think it's 2278, and it's better in the last couple of years. It wouldn't be better if you go back far enough. Look, watch this. So 36,000. I'm sorry for deviating here. And then back to the preferred settings. So, I mean, it's one half dozen of the other. I don't have the truth as far as what's right. What I try to do is have settings that I believe are not curve fitted, right? Wes has pointed out even using a stop loss could add some degree of curve fitting for sure. There's no question about it. What I'm trying to do is have the most general settings that work well over the longest period of times, and what I believe to be has the least amount of any type of efficiency added to it, curve fitting to it. That's what I don't know. I don't know that that's the best, right? But I believe that it is the best for making sure the job gets done. All right. So with that little deviation taking place, the sell side just triggered a short on Bitcoin. And you can see that price is going sideways over here. So just like looking at this from the lens of the past 3 weeks, that Bitcoin, this 3 weeks, yeah, almost 4 weeks, three weeks, whatever, Jordan, you're rambling, is doing a pretty good job about staying out of the chop. The hardest thing ever for this strategy, and we've looked last week at past instances of when price went sideways the longest, we saw that, you know what, even during all of those hardest instances for the strategy, still did pretty well, right? And after that, those tend to lead to big moves. You saw it on the short side if you were on Bitcoin or Ethereum. After this long, grueling sideways consolidation, it led to a big move. It wound up being to the downside. And if you're trading both sides, you're able to capitalize. Same thing over, we have another situation, price going sideways. And the fact that is you could get chopped around. You should have that expectation. We've looked at Bitcoin bottoms as well. And I just want to put up a chart of Bitcoin. And, you know, if this is bottoming, right, it looks like it's getting ready for a leg down. That could change very quickly. We have that important highlight of the previous cycle all-time high. And, you know, that's regardless of the point. The point I'm trying to make is that when we looked at past bottoms, that often they are volatile. We saw our 23% move up. Then we saw our 20% move down. It seems to so far have a lot of rhyme to what past bottoms look like. In this particular moment, be ready for that type of choppiness, except don't be afraid. I loved yesterday in the Ethereum chat, in the Ethereum discussion channel, people talking about, you know, all right, we finally got a buy on Ethereum. I'm ready. I'm ready for, you know, a 10% pie in the face stop loss. And that should be the attitude almost each and every time you enter a trade, knowing that you have about a 30% win ratio. Just go in with the expectation, not that it's going to be a winning trade, that it's going to be a losing trade. I'll move forward to Ethereum in 1 second. I want to finish here with the short side on Bitcoin. It did go ahead and it did trigger a short side if you're short on Ethereum. The preferred settings I'm using is actually, we're going to talk a lot, I think, today about the short side, about what the preferred settings could be. I have it officially as 5%, and I for the last, I've been flirting with 2%. So it's confusing because I have 5% written in the description below. I think that we'll have a little bit clarity at the end of the session as far as that. And I also have to say, I think that potentially I might have something groundbreaking to share with you today. So with that little bit of tidbit, let me keep going. Yes. Hold on one second. Sold the dollar. So I'm going to clear that up in 1 second. Let me get off Bitcoin. So Bitcoin 2333 on the short side. These are the settings I'm using. I'm using Zuzu's strategy, no Kalman filter, and short side, and I have 2% here. I have to clarify the 5% below, but I have 2% here. Okay, let's keep going. Ethereum triggered yesterday a buy signal. Right, this is sold with the dollar sign. We had a buy signal last night on Ethereum. It was the first one since April, since let's say $3,000 out of the market the whole time. That right there, absolutely priceless, knowing when to be in the market, when not to be in the market, and on which side. Now, this is long side only, buy side. You just know not to be in the market. And then finally, a trade triggering. It took a little bit, like a 5.6% loss on that. You know, at least it wasn't the full 10%. But nevertheless, expect that, as we've talked about coming out of bottoms before, if this is the bottom, we don't know whether it's the first, second, third, or you never know what trade is going to not only be one of the 30-ish% that is profitable, but one of the, lesser that put in those big gains. That's why you got to be systematic. Look, this is important over here. This is really where we shine, making sure that we cover all aspects. Thanks for smashing that like button. I'm glad that you're here. I'm glad to be sharing with all of you. We didn't have a signal on Bitcoin yet. I just want to fall back over here quickly to Bitcoin on the long side, and just to show you that, well, look, we're very close. If price would have went up maybe 1,000 or whatever, 2,000 more, it looked like that we were very close to also having a buy side signal on Bitcoin. And I have to say, even though we finally see buy signals popping off on both on Bitcoin, the last buy signals, don't forget they are drastically different, the settings. But the last buy signal was, at $30,000. If we, just because we have buy signals popping off, that's just potentially that we're seeing some type of trend change. There's no givens, right? And that is also, just let me reiterate, this is why the real importance, if you are trading something mechanical, we talked about CTM 1.0 discretionary yesterday, talk about it more today. There's a lot I want to cover, but I want to focus in on some important psychological aspects of what we're doing here with system trading as we're seeing the turns taking place over here. And you could see here on the long side, it exited the next bar. And that could trigger again on the buy side very soon if price sees any type of upward momentum. And it could also be that price continues getting stuck over here in a range with lots of, small losses or even a big loss or anything like that. On the short side over here, it has done a good job of keeping you out now, though. So that's pretty good, because when price goes sideways, you're trading both sides, as you all know, you could get chopped up on both of them. So just Ethereum short side. I didn't go over the preferred settings on the long side. I want to make sure I do that really quick here in today's session and be a little bit more consistent about that. My preferred settings is in the link below. Uses a 10% stop loss. It uses the same custom settings as Bitcoin, and it's using the Kalman filter with a 5170. Big shout out to everyone here in CTM who helped find and dial in to these custom settings, including Reza, Tim, Michael. It never would have been done without y'all. And that's the CTM Hive Mind. It doesn't matter what you contribute, what role you play. Each and every person's role is equally as important. Now we're looking at the short side over here, and just to give you those settings, it's the same thing as Bitcoin as far as being the 2333 period. And the only difference is the stop loss. It's a 1.4. It's a tight stop loss. That being said, in that part, no way. We got to check it out, only because this right away, I just saw this tweet today, and he said, very interesting macro read. This is from Camel Macro, and I'm going to share it right here in there. That's my homework. I haven't read it yet, but I'm interested to read it. As you all know, I've taken that approach that I want to read and know as much as possible right now from everything. Let's see what Peter says. Peter says, Jordan, I'm getting ready to get in on the CTM and do an interview with all you guys. Meat demand in the U.S. is crazy high and showing no signs of decline. Love how Bitcoiners are becoming ranchers and ranchers are becoming Bitcoiners. I'm loving, if you're not following that and what's going on there, that's really, really important. There's a great podcast on Tales from the Crypt a few weeks ago talking about the history of Texas and how Texas is won and why Texas was essential for the growth of the United States and how cattle was that stored energy, the protein, right? And much making the same analogy to Bitcoin, including the nodes on Bitcoin. And anyway, really good stuff. As to wheat, we should be getting our first solid estimates about Q4. That's a while away for harvest in September. That's when we'll learn the impact of the fertilizer shortages. Okay, keeping it real. You know, my insight to that is that's difficult, but the markets are forward thinking. Yeah, I go to this one. It feels like to me, we know that these people, there are actors, bad actors, who are really intent on manipulating markets. The gold market is probably the best example we have of that. And, you know, listen, inflation's a problem. We're looking at food and energy being the problems. If you look from a supply demand or just like a logical way of looking at it, you would think that wheat would not be coming off. Here it is. That's right. CTM blow off top, next resistance. Oh, that's a tough one. That's a tough one to call because right now you're looking at a locomotive taking place. You're looking at the dollar coming in hard. And, you know, if it breaks above, this is a good look. And if it breaks above the next trend line, look at this touch over here from the dollar milkshake theory back in March 2022. And then you're looking at this over here, that resistance. So if it breaks above there, which is coming in roughly right now, somewhere around 107.5, I mean, this thing could go much higher, right? And if you start, like if you look at things logically, and the markets are not always logical for the short term, but if you look at the situation in Europe and you look at how energy deficient they are, how does that resolve itself? And then you see that they continue in order to keep their credit markets in place, much like the Bank of Japan is doing, where they're doing just straight yield control already. We need to see that the ECB needs to continue running their quantitative easing programs, Fed's tightening. If we break the parity at 1 and that 96 cents doesn't hold and we go down towards 80, just that has to be somewhere around 80 cents. Because don't forget, you're not just looking at the dollar index, the quote unquote dollar index. You're looking at the euro US dollar largely. Over 50% of this index is weighted towards the euro. So if a big move is happening on the euro, it's going to be priced in on the DXY. So that's my opinion. I'm not looking to catch any type of falling knife, but if we want to use and look for, as we did with yields, and try to wait for, try to catch it as we get the break. And don't forget, there was one over here. This one was faded. Sell impulse faded. Second sell impulse faded. A little easier to get out, for sure. Third one was the win on the DXY. Let me zoom in and we could add in, and we'll continue tracking it. And we're far away right now from having any type of impulse. If this keeps going higher at that type of trajectory, at that point, we'll be able to add in a new one. I don't want to do it right now. I'm doing it. Shoot, I didn't want to. Only because of, you don't want to get in the way. There's no reason to try to pick a top. I felt like what we were doing here it's different market right now. And don't forget the beauty of this one. That's that green line where you had that beautiful CTM 1.0 breakout, retest, resumption up. So we'll continue tracking it, but it's too soon. All right. Thanks for being here, everyone. Have a beautiful. No, kidding. Let's keep going over here. I got through the CTM 2.0. So just a heads up one more time. I have my preferred settings and the chart templates in the description below. The only discrepancy is that I have that 2% here, which is what I've been following and using instead of the 5%. We're going to take a look at that a little bit further in the session. I want to keep going. I want to look over here at Branco's oil chart. And right now we've broken through that line. Look at that. That's pretty significant. We've broken through that 102 over here after that first, the top green line. Hold on one second. Let me pull up my chart of oil really quick. And oil, I thought we'd be at 90 by tomorrow if we continue at this rate. We might be there right now. And I'm trying to just get a quick look. I like Branco's chart better. I said it before since last week. This is much more of the TI style that I appreciate. And I have like that horizontal at 93. I want to check in why it's there really quick to see if it's anything significant. Not really. It's kind of arbitrary. I don't really carry it too much weight. And yeah, I don't. But we're getting close to where what I said could be a trend change, even though we were, and not only were, we nailed the first one up here. The most important, that was the week we did 2 weeks ago. We were talking about the macro could change quickly. We got it. We got to give a props when we get it. But at the same time, we talked about to call any type of trend change would be below 93. I think that's kind of arbitrary. Not really, not so much actually. It's a pretty good level, and it looks like we could get a test of that sooner than later. We are seeing pretty crazy stuff going on. Zach, always a pleasure to see you. All right. It could be today. That's right. At the rate it's going, this is reminding us of what it was like watching oil go from 35 to 1450, and then boom. We all remember that. And that was some of the best work we ever did here together on the downside, not on the upside. We should have all been buying oil at $20 a barrel back in the summer of 2020. That was some pretty bad foresight on my part with all, let's say, well, there was a lot going on. We'll just leave it at that. Let's keep going. I want to talk about this briefly, not very too much, but briefly, because you all know this is just like a reminder here that I want to CTM 1.0. This also I want to say today, if you didn't see yesterday's session, I think that you should go ahead and watch it. I introduced something that potentially could be pretty powerful. I have it ingrained. What I want you to focus in on today is just below. I have, this is this line over here, the one that is not the histogram bar, but the line. I want you to focus on that, on both of these views. This is using the 333 period, right? And then this is using the 333 period, and this is using the 70, and I just want you to see this. This is all I want to point out today. It's going to take 2 seconds, but it's like ongoing of what's going on with me. And you could see that the 333 period, going back to our TA that we did in real time over here, you remember the big breakdown, get neutral? Look when price on the 333 turns negative. And then the most important trend line in crypto was pretty late. We were able to get in before on the retest over here, and then also offered the break out of the descending wedge over here. But nevertheless, once it clears the most important trend line in crypto, notice how it turns green again and stays green until when? The breakdown of 53,000. Interesting, right? And then you could see over here, this was look, a lot of people were aware of the bear flag at this point. I was looking more at a potential descending wedge taking place at that particular time, giving it greater credence than the bear flag until it was broken. And you could see on the breakout of that, price went positive, and then quickly on the breakdown, flipped back negative. it's a pretty good guide. And what I'm getting at is that might provide some good signal as we also continue to build those discretionary TA skills at the same time as we continue our work forward. And then I just want to show you now using the 70 period so y'all can see the difference. And just to point out, you can see that it is, you all know, right, that the 2270 well outperforms the 2333. But you also understand from what I just showed you how it gives you that overall intermediate trend, right? Even more the intermediate trend. And it does a good job. Here you can see the 70 period on the breakout of the descending wedge, for example. You can see over here on the pullback of wave one over here on the exit, right? Trendline break. It's giving more of the trendline break signals, right? Over here, this one was a false signal, but you see how it took it out and then getting negative. So you look at this breakout over here. So the 70 period here actually gives pretty strong signals of when we're seeing those CTM 1.0 trendline breaks. And then also I think where it gives a maybe even a potential better average, better advantage would be helping us on those trendline breaks, and that good entry is maybe even getting taking profits, getting out sooner, protecting ourselves. And I don't know whether or not it should come off of something like if we're using this as an addition, but we're using the 22 period, or it should be like using the 70 period with the 333, right? Now, if you were to go ahead and we were to trade off of that systematically, the results would not even compare to what we do and what our preferred settings. Nevertheless, it would destroy anything else out there. So that's the conflict over there. So thank you for letting me just share some of the thoughts that I continue to play with and work out as I want to have much more focus on a marriage between CTM 1.0 and CTM 2.0. And then I want to move forward into what I said. This, by the way, was put out by SYB yesterday, talking about Ethereum and Bitcoin and trading on that cross. These are the settings that he introduced, and it was 3362. Kalman filter. I'm not sure about the stop loss. This is what I was playing with. And then these settings, the custom settings, are way different than the preferred settings I'm using. And that was 6300, 1.2, 1.6. Point being here is that CTM continues to be seriously creative. That leads to big wins. It's like most people don't realize, but like 99.5% of like exploration leads to nothing. It's because like when there's something there, then I'm like, hey, here's where we need to be on and focusing on. But like without all of those like failed attempts, you never find either a happy accident or build up that knowledge base to get you where you're going. This is pretty insane. It's pretty good stuff. It is obviously being mentioned here because of the value. You also have Sale Guy. Oh, man, please don't. Yeah, phew. I hope I didn't butcher that. Sale Guy's talking about his focus on what he believes are 3 projects that are going to continue to be around: Bitcoin, Ethereum, and Cardano. Talking about his preferred settings on Cardano, and then him and Zuzu getting into a big conversation about potentially having a fluid ratio to know how that should look like. All that stuff is absolutely just enormous. Grateful for it, and there's more. Let me jump over to the Discord really quick. By the way, really liked this conversation taking place yesterday inside the Ethereum channel, talking about as that trade was entered. We hope we don't have to test the 10% stop loss. Nevertheless, prepared for it, ready. This stuff was very good. I also saw in the altcoin channel the day before some really good TA that was put out. Fire continues putting out lots of like consistent TA, CTM 1.0 style. All this stuff is noticed. We don't get to talk about it all the time because there's so much. But when it's noticed, I just want you to know that keep going, everyone, because it all has this accumulation effect for everything that we're doing. I found that the 70-50 Kalman Gain gives some good gains, maybe something on seasoned traders to explore. Thank you, OG. And like, listen, this is a general heads up for everyone. If someone like says something or comments about something or introduces something, and like if there's something there, like it's not ignored. Like I feel like I've done a very good job over the past like couple of months, making sure that when people are going off on anything, to show that I'm present, that I'm with it, and I'm trying to do everything. That so if something is important, like this may or may not be, OG, like and you spend more time on it and there's something there, please bring it up again. Don't ever feel like anything is being just not viewed or anything like that. That's to everyone here. CTM. Lots of love to everyone. Zuzu's doing a great job at showing how far you're away from switching and flipping to that long side visually. I've added to this, by the way, both the long and short side. I think it also provides just a good view. This is something that we need to talk about right now. I want to jump over here because the whole point of like where I am about to go with you all has to do with this over here. And that is meaning to go over, right? The first, before we get to Ethereum, starting on Bitcoin and seeing whether or not we can make any type of adaptation on the sell side. We're always continuing looking for that improvement. We have just not had one yet, right? The sell side is very difficult to nail, whereas the long side, right? I love that quote from Stanley Druckenmiller, and he'll tell you even the best short trader in the world will tell you they've made 90% on the long side. It's just the math. And that's really, really important to remember. Nevertheless, what I want to do, what I'm going to do, and I'm not going to do it right now, you could tell, but it's up here and it's my attention, is to go through the 2333 for Bitcoin using the 5% stop, using the 2% stop, using Sale Guys 2150 with the 1.2 stop. And then after going through all of the years, right? Maybe I'll record it for you to make it better and smoother. Finding out what from there we want to take forward. Then I want to place that into Andrew's over here using the 3 periods. Compare it to that, right? Sorry, that should be on 18. I don't want to take that off. Comparing it to that to see, okay, out of those 3 versus this, which is better? And then out of those first 3, I want to take it into Andrew's alpha. And so the alpha tester, from my understanding, it's able to compute different settings on the long side and short side, but it will not allow you, if you have a conflicting signal, to take them both. It'll ignore it. Okay? It also, by the way, for the first time ever, is able to use the Kalman filter on the short side. So pretty incredible to start off. And maybe it'll turn out that if there's conflicting signals, well, maybe the best thing is to do to omit it. But maybe it's not. And there is where there is tension or conflict, as well as I just want you to all, I know that sounds like a lot. So there's a lot going on all the time. And I'm at the same time, as I have shown, when we went through that big period in March and April and May, we will, after we get what we want accomplished, roll back and then make it easily acceptable for everyone. That's at the heart of all this. Nevertheless, potentially, and by the way, that Kalman filter, this is just random, but look at what it does to the drawdown. Now, it's also obviously going to decrease the overall returns, but you could see this is going ahead and making that drawdown significant, which means, I know in Rez's Tesla, I loved it, that you could actually add a little bit of leverage there to see the difference. But because of Rez's tester, if you have that ingrained in your brain, you know that taking that 16%, 70% drawdown, right, and then bringing it up to 30% with a little bit of leverage, it would drastically outpace this return. So I hope that all makes sense. I know it's a lot. Thank you all for bearing with me here as we continue And I want to get into just one other thing today that's very important for me. So let me go ahead and do that after this commercial break. Just 1 second here. If you're happy to be here, smash the like button, or forget smash the like button. You probably already did that.
Why's everybody gotta hate each other? Who decided?
Actually, not even. I just want you all to know how glad I am to be here with all of you.
Wrapped it in a blanket and put it in a buggy. Could you see that maybe that baby was just the same as you are? You know it's never been easy. Every day for everybody ain't breezy. And I hope you realize when you look into another person's eyes.
All right, we don't have time to waste. We got to keep going. So I want you all to again, if you missed yesterday's Pi cycle discussion, that's a good one. That's in towards the end of yesterday's video. If you didn't see yesterday's CTM 1.0 discussion, that's something also that I really recommend. I know that I just briefly touched on that today, and with good reason. And then I'm laying out what needs to be done on the short side for, I said this week, that we wanted to make sure that we were able to go ahead and focus on the short side and see whether or not we could find anything, let's say, more preferred. At the same time, that kind of led to this, and I just want to briefly talk about this and get the hive mind. Dave, great to see you, my brother. Zach, so everyone, thanks for being here and, being you. So with that aside, that this is still the priority and are obviously being worked on. This I also want to discuss today, and I didn't know that. Thank you. A couple people said that. And which part, Wolf Skull? Did you like the CTM 1.0 part, or did you like the Pi cycle part, or did you like them both? That feedback is vital for me. Everyone is important to me. So in doing this, that also led to this. I want to talk about this 1 second. When I say this, it is, let's just call it like, is this potentially the perfect hedge? All right. With that in mind, I want you to know that I don't have the answer, but there's something here that needs to really be shared and discussed. And when I say I don't have the answer, like what that means is if you're trading both sides, if you're, we understand that how the compounding effect could work. For example, right now in real time, people are able to understand if they were trading Ethereum on both sides, right? They know that on the long side, they were out since 3K and just finally took a small loss over here. But on the short side, they've been able to put up some big wins. So it's like if you're trading both sides, right, you have that advantage of like, instead of just being on the sidelines, that actually, and it's not easy to execute on the short side, but over a given amount of time, your actually balance is increasing and you're just going further. Like that part's undeniable. However, let's look at it in a different way. Let's pretend that you only wanted to execute on the buy side. Again, Stanley Druckenmiller, even the best short seller will tell you they made 90% of their money on the buy side, right? It's just how the math works. So let's pretend, and this is for like experimentation. This is me just putting a thought out there to get all of your insight and views onto it to see if potentially this is something that we need to focus on. What happens if you were executing on the buy side only? Okay, only the buy side. And then you had for the short a hedge in place. Okay, and the hedge could look one of two ways. It is either using the 333 period, right? The 333 over the 333. So if you go back over here to 2015, it's basically break even. Okay, now if you go back further, right, 2015, it's basically break even. And what the goal is to always have it more or less break even. Because it is the 333, it should be slightly positive. We'll go to 2012, see almost break even. But what it is doing it is going to ensure that at all times you have this perfect hedge in place. And if at any time you were to see, and of course we attribute this being much less likely on something like Bitcoin compared to anything else out there, but if you take any cryptocurrency, that's energy, right, and you were to use those same settings, right, you will see that that hedge remains in place. Now, this is not fair because I don't know what exchange I'm using, and it's not going back too far, but I hope you're getting the point. You can see that it's always having that the whole idea of this is buy side only, but also at the same time having a hedge in place, right? And you can see that how this is, that one doesn't really work well, but this is only going back. Let me see where this starts. This is only going back to 2000. I guess that's why. Nevertheless, I hope the point is being made. And let me come back to Bitcoin really quick. And then I wanted to show you one other thing that is related to this. Or these settings might actually be better. The 333 over the 450, and that's coming back here on Bitcoin going to 212. You saw it was minus 6%. Here it is, obviously a little bit higher. And so there's I'm wondering whether or not, hold on last thing. Let's just jump over to Ethereum. So I guess on this part doesn't seem good to me. I guess I figured it out for myself, not for myself, with you. But I guess that's just a question of data fitting to Bitcoin. Because on Ethereum, this is going back all the way, right, to 2016. And that's not much of a hedge. Oh, hold on. It's because the stop loss would not be the same. Let me use no stop loss. Yeah, I digress. Anyway, so that was fruitful in seeing that, you know what? Unless someone else has a different opinion that could sway my mind, actually, that is just kind of, let's say, curve fitted to Bitcoin and doesn't work, therefore, and not something that would be good, unless I'm missing something. But it doesn't seem to me, hold on one second, better. I guess that maybe the stop loss is better, but, you know, is that providing much of a hedge? I mean, for sure, you know that the long side could take the 20% loss on the downside and make up for it for more. And then do you have, in case Ethereum goes to zero? I don't know. That left me a little bit confused because I don't have the answer or the clarity. Hey, like I said, 99.5% of the time, your efforts do not produce fruit, but it's worth it for that 0.5%. It's like a VC, right? That's what the VCs are doing. Anyway, that's what it is. And you know what? Happy to have go down any tangent, even if it comes back empty-handed. But that's it for today. I think that was a great session. Happy to spend this Taco Tuesday with you. Let me go ahead and actually finish up with a little head snack, just in case that there's anything else that comes to mind or anything else any of you bring up.
Markets, analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing, just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room, grab the bull by the horns and through the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
You know what Head Stack was telling me last week or the weekend before last, that, you know, he spent a lot of time obviously doing this. That was an act of great love. Really appreciate that. And it's giving us a lot of good times over the course since it's been, released. He said that someone salty left a comment recently and he didn't make him feel good. If CTM, if what we've done, anything that I've shared with you has had any type of, let's say, impacting your life, could you just leave Head Snack a sincere comment today? That would be pretty cool. That would be pretty cool. Lots of love to Alan. Always lots of love for Alan. Always lighten up those heart eyes anytime Head Snack comes on. I hope Alan is doing well. I really do. And that's it for today. God bless you all. Get natural gas coming back down. Seems crazy. What's going to happen next winter, Dave? I don't know. But, listen, over the last 2 weeks, Dave, I'm not sure if you saw the sessions that we did. Starting over here, the tail end, from mid to the end of June, talking about how the macro could change quickly, focusing in on the 10-year, oil, natural gas, and food-related commodity prices, and talking about how we felt that we were at, quote-unquote, potentially peak inflation. Now, that was not like, and we pointed out a lot of people think that, well, we're entering some type of commodity super cycle. Well, that all may be. By the way, it was Will here in CTM that in June 2020 showed us on that channel breakout of commodities when they broke out. Again, bad move on our part, not having the foresight to understand the implications of that. But what we're getting at is not talking about that we're not going to see massively high inflation occurring across commodities over the next X amount of years. Only in the near term, most likely, they were leveling out over a month-over-month and year-over-year basis. And that's why, and not only to reinforce that you could have the larger picture view, but the timing in between is essential. And we're only pointing that out so we can continue to fine-tune that and work on that and get better and better ourselves. Everyone, have a beautiful day. Thanks for being here. I don't know whether or not that the market is pricing in recession, lower demand. I don't know if the market is pricing in perhaps an end to the conflict. I don't know. And I don't know. Deep Power, great discussion. If you Deep Power, this is really important stuff. In the macro channel, you will find, speaking of Peter, a great video shared by Luke. Please watch that video. And then I also saw that in conjunction with that, Mark Moss did a video that Russia is running out of gas. So watch. I mean, we're under the mindset right now that we have no idea what's happening, and we want to not be married to any opinion, and that we want to be open to all and varying opinions. And we're seeing also in the macro channel, Elise did a great job talking about what's going on with the, let's call it the Eurasia IMF, and this block, the BRICS, gaining more and more, let's say, working together stronger than ever. And I think we need to be aware of all different dynamics that are taking place and doing our best not to let the narrative sway us, but just kind of just doing CTM first principles and trying to just triangulate different views and help form our own, and then throw the hive mind on top of that and help us work together to do it. Yep. Craig, never been happier. We're absolutely crushing it, and we're going to continue. Imagine where we'll be 6 months from now. The market's forward-looking. CTM is forward-looking. No, great session today. Enjoy your energy, everyone. Thanks for being here, and I'll talk to you on the inside. All right, everyone.